What's going on, guys? In this video we're going to be talking a little bit about how you can make a lot of money day trading, right? So we've all kind of heard it, right? People taking $1,000 to $100,000, $10,000 into 500,000, taking 20,000 into a million. It all sounds nice, but at the end of the day, it's not very realistic. In order to make money and a lot of money, you need a lot of capital, right? So I will be the first person to tell you, if you are a person that is looking to take $1,000 and turn that into 20, 30, $40,000, I'm going to tell you your chances and probabilities are this thin. Does it happen? 100%. I've seen it happen before. I would never recommend it. The way our industry as day traders in the stock market has evolved over the years, right? We've gone to zero commissions for trading stocks. We've done so many things. There's ways to get around the PDT rule if you want to trade options on a cash account. There's all that kind of stuff. But the odds and the probabilities, the odds are really against you. Okay, the odds are really against you. The chances of you taking $1,000 to $1,500, $1,000 to $2,500 are there. And the problem that happens when people do that, they go from 1,000 to 5,000, 1,000 to 3,000. Next thing you know, they start, betting too big. They start sizing too heavy. They don't really have a strategy that works. They're kind of using this strategy. They're using that strategy. They're playing the VWAP. They're looking at RSI. Then they're chasing this hot stock of the day. They're looking at what is J Powell saying? What is the interest rates doing? What is the bonds doing? What is the yields telling me? When's the next FOMC? When is the next CPI data? All of that stuff is great and earnings and all that stuff. All that stuff's going to sway the market 100%, but you don't need none of that shit. Okay, what you need to know is technical analysis. What you need to know is and identify what type of trader are you based on your emotions and based on your personality. Are you someone that can sit in a trade for 2 or 3 or 4 hours? Are you someone that can sit in a trade in drawdown 10, 15, 20% if you're playing options? Are you someone that needs to get in and get out? Maybe you want to take a smaller move, but you want to get into the trade, and if it works, take your profits, and if it doesn't, cut it right away. Do you have that personality? Are you someone that works a 9 to 5 that maybe needs to put on a trade for 2 or 3 or 4 days? If that's the case, excuse me, and you need to swing trade a little bit, you can't trade every day. You cannot look for trades each and every single day. The person who can maybe, let's say, for example, you don't have a cash account where you can't trade options with the available funds, and you can only make 2 or 3 day trades or 3 day trades a week, or whatever it is. If you're that type of person and you need to hold trades for extended periods of time, you need to find stocks that have good amount of measured potential. And what I mean by that is you can't sit there and try to take a day trade or a short-term swing trade into tomorrow if your stock that you're playing has got 75 cents of room and it's got supply and demand all trapping all around it. What you need is bigger moves. You need to be able to get into plays that are going to have dollars, right? So if we kind of look at Tesla here, because I love to trade Tesla, if we kind of look at the original breakdown spot on Tesla, we lost this 100-day EMA here. I understand there's a lot of lines on my chart. If you guys want to learn how I trade this and how I find these setups, join evolutiontraders.com, become a lifetime member today. I'm going to get you guys inside the community. You're going to get access to one-on-one coaching, mindset coaching, and you're going to get access to my strategy, which is over like 4 or 5 hours worth of strategy talk and webinars. You're also going to get access to the online community where I post a watch list and to trade with other traders who are doing this, so you guys can talk intraday and as well with me. We lost this 100-day EMA, okay? Then we had an aggressive bounce that got rejected at supply. Okay, if you don't know that we were going to stop here or at least pause here, right? We never exactly know where we're going to stop. I'm going to be very clear. When you get into a trade, whether you're long or short, you never know if it's going to reach the next destination. You never know if it's going to fail or not. What we do know is potentially where we could be heading. When you potentially know where you could be heading, then with that information, with that data, what you can do is take profits into that. And if it does lose a level of support, you can exit the trade, because technically there is no reason for you to no longer be in that trade. So if we look at when we lost this, if you would have shorted here, okay, a new trader would have gotten scared if they would have held overnight and this gaps up. They would have sold for a big loss here, right? Even if you took a weekly expiration, you would have sold it for a big loss here. But if you would have known that potentially until we close over the 5-day moving average here, which was sitting at 201, that potentially we could still come down if we confirm this. So if you would have just held 2 more days, you would have got that breakdown, started to break even, and then realistically from Wednesday, Thursday, and Friday been in the money. Huge, right? I mean, huge, right? What does Donald Trump say? Huge, right? You would have been in the money huge. This dropped almost 13 points in a matter of 3 days. That's an astronomical move on a stock like Tesla. Like, that's huge, right? It doesn't even make any sense. You know, when you catch those moves, a trade like this that we had this week on Tesla, and there's one that started to form on Nvidia and could get confirmed next week, are trades where you can take that one trade, and if you time it right, because it's all about timing, it's all about patience, that's going to make your P&L for the month, right? You can kind of take your foot off the gas, you can relax, you can take a step back, or for damn sure going to make your P&L for the week, if not 2 weeks, right? So when you come to these situations and you get in these kind of predicaments and you want to make a lot of money, you need to understand where and when you can take trades and when you can't. And the problem that so many traders have, and I'm going to say at least 90% of retail traders, the problem that they have is they are too impatient. Okay, when you're impatient, you want to take a stock long just because it opens up green. You want to short a stock because you believe that the market's going lower. You want to buy long because you think that we should bounce. Or I hear this so much and it really makes me cringe. We are oversold. We are overbought. I'm going to go long because we're oversold. I'm going to go short because we're looking frothy and we're overbought. Guys, a stock or an index is worth what the market is willing to pay for it. If the market's not willing to pay for it, they're going to sell it off. If the market wants to run a stock, they're going to run a stock higher. It doesn't matter if you personally think that we are overbought. It doesn't matter if you personally think that we are oversold. So forget all that nonsense. Just look at the technicals, right? You have to be strategic when it comes to taking entries and exits. You have to understand, potentially, if I take this trade, where am I going to stop out at? Where is it going to break trend? Where is it going to break structure, market structure? So if we kind of look at Tesla, essentially has been selling off since February the 28th, right? If we kind of take this high point, did we know that this was going to be the most recent high point on the 28th? Of course not. But what you could start to see is as we start to lose some of these levels of support, we are now in a down trend. So if you are trying to bounce it because you think we're ready for a bounce, or you see, an intraday bounce that lasts 20, 30 minutes, maybe 60 minutes, on an intraday channel, and you think that this is the bounce, so you get long and you hold it, 2 days later you're losing and blowing up your account. You have to understand where these stocks can potentially go. So if you understood that, you would know that once we came down here and tagged this channel line here, which is an LR50 channel, and we tagged this 20-day moving average on the first, once we got below it, guys, this is a downwards power move that has never closed over the 5-day moving average. Your 5-day moving average on a daily time frame is going to be your shortest term sentiment. That's going to be your power trend. Put it on any chart, the 5 SMA. If you get an intraday breakout on a 2-minute chart and we're staying above the 5-minute SMA, then you are the 5 SMA on a 2-minute chart, then you want to ride the trend until it breaks trend. Right now, we haven't broke trend. Now, could we be looking at a little bit of a bounce? Of course, we could bounce into 182, and then after 182 is 188. So you have to know these levels. If we do close over 182, 183, there might potentially be time to take a little cash flow scalp to the long side, maybe 10 minutes, 30-minute trade, an hour trade, try to take $1 or $2 here, but we're going to want to sell because if we get rejected, they're going to pull it in dollars. So what we want to risk is cents to make potential dollars. Again, if you don't understand that, then you're not going to really understand when you should be going long, when you should be going short. You're just going to go short because you feel that the market's selling off, and you're just going to go long because you feel that the market's running. It doesn't make any sense. Every time, the market gets frothy and we start, running higher, you see all these new traders come in and everyone feels good. And then when they get blown out, you see a whole bunch of people just leave and exit the market. It happens every single time. Guys, if you want to stay in this business for a very long time, you cannot trade every day if you have a small account. If you're someone that has the time and you want to put in the work and you do want to trade every day, my number one recommendation is to get funded through a prop firm. Okay, I don't care. I would take $1,000 if I had to restart over, and instead of putting that $1,000 into a brokerage account and trying to trade options and trying to double that or flip that account and then do it again and again and again, I would take that $1,000 and I would go sign up to learn how to trade and prove to a prop firm that's going to hand you funds upon approval. Again, there's so many misconceptions about prop firms that, you never trade on a live account or a demo account. Some accounts are real, some accounts are fake. Guys, I don't care what you guys are trading on. If they, if they're saying that they're going to fund you $50,000 to trade with, but you can only draw down $2,500. Well, guys, if you draw down $2,500, you didn't lose your $2,500. But if you can use $50,000 worth of leverage, buying power, quote unquote, to make trades, and you have a $2,500 drawdown, you should be able to make money because you've got enough power. You don't have to worry about PDT roll. You don't have to worry about this, that, and the other. And then when you get into trading futures like the NASDAQ, the NQ, or the ES, you can make a lot of money very, very quickly, but you got to know what you're doing. Again, so if we just kind of take a look at the technicals here, what is this telling me? Could we be looking at a dead cat bounce here, maybe Monday, Tuesday, Wednesday? It's entirely possible. If we do get that, we're going to need to at least take out today's high, 178.68, and then we have about $3 worth of room into 181. There might be a small trade there. If not, and we get rejected here and we can't get above that 181, I would be looking for the huge level here at around 165, 166 on Tesla. And this is going to be another flush and washout at least 10 points into 155. That is what it is. Look at all this space. There's nothing here. There's nothing here. We broke out. We went into distribution and we rolled over. If we don't start treading higher, and we start to get rejected here or here or here and roll over and lose this 50 SMA, guys, we are coming very quickly to 155 on Tesla, whether you believe it or not. Now, I'm not saying that we're going to get down here, and I'm not saying that I'm a bear or I'm a bull. I'm just going to trade the stocks that are going to give me the most amount of measured potential. And when we're looking for measured potential, we're looking for stocks that have room. And I would recommend to everyone, if you want to make a lot of money trading stocks, focus on 2 or 3 ticker symbols only, because when you focus on 2 or 3 ticker symbols, you start to understand that when Tesla loses this level, I'm going to be short. I already know that there's a lot of room here, so I want to be waiting for this play. Again, if we bounce, yeah, I might take a little scalp to the long side, take $1 off of Tesla very, very quickly, but that's going to be nothing compared to the 10 potential dollars I could make when we flush. Will I catch all 10? Does it have to go down 10? No, absolutely not. I might catch 3, 4, 5 points, right? But it's a whole heck of a lot better than trying to scalp every day for 50 cents or $1. Now, you can take those moves if you have a tight stop and you're a little bit more experienced, but again, that's not really a big move. We don't really have a big move on Tesla to the long side until we get over 196.50. Then from there, we can run into 209. This is a trade you're looking for long. This is a trade you're looking for short. Everything in between is a cash flow scalp. That's how you're going to make a lot of money in the stock market. Understand what you're doing. Understand what type of trader you are. Get a trading journal. Doesn't have to be nothing crazy. You don't need to go out and sign up for some expensive software. Take a regular pen and a paper and write down how you felt when you got in the trade. Write down what ticker you traded. Write down how much you made. Write down, was it a win or a loss? Do this over and over and over, and then you will slowly start to grow and develop as a trader and understand what you did right and understand what you did wrong. I hope this video helps you guys. If you guys want to trade with me, you want to learn my strategy, you want to trade with my team on Discord, you want to get access to one-on-one coaching via Zoom or voice chat or whatever, we can go over your trades, we can go over mindset and psychology. Feel free to join Evolution Traders. That's included with the package. It's a one-time fee only. If you guys don't have the capital to trade and you're undercapitalized, I can get you guys funded to trade stocks, equities, Tesla, Nvidia, Apple, whatever you guys want to trade, or you guys can go the other route and trade futures, which is an NQ NASDAQ or the ES SPY mini or micro contracts. I hope this video makes sense, and I will see you guys all next week.